The market started off so nice this morning, and then the consumer sentiment numbers had to come along and mess things up. So consumer sentiment was down a bit. We'll talk about that in a minute. But I don't think overall, really, this should be the big impact of the day. I think this, I could be wrong. It could be ruinous. It could really have the market going down strongly. The big thing about today. These are going to be the three best shows I've ever done, at least cumulatively. I think I've had some good shows over the year because of my guests primarily. But today, oh my goodness, this show, hang into the end because the consumer sentiment is going to be the last thing I do. But there's a couple of other articles today that I think are extremely important for you to hear. Then I got Larry Goldberg later today, but I got AJ tonight, and this is by far the best time I've ever had with AJ. Very, very interesting show. So I'm sorry I'm doing my intro early, it sounds like, but let's go ahead and take a look at the details of what's going on this morning. The market started up very nicely and is now coming back towards neutral. But with regard to Tesla, all the headlines, almost every single headline this morning is about a vehicle which is unlikely to ever see the light of day. The financial press is glommed onto the Mexican version, this Chinese lower cost, take all the goodies out of the Model Y version. And look, I think it's a fine idea. I think these guys over in Shanghai came up with a good backstop. I mean, if the new Model Y sales don't, keep the Shanghai factory going at full tilt, providing a car with maybe cloth seats and, a few other things taken out of the mix, reduce the price by 15, 20%, and you might have a real winner there, a profitable winner. So I got nothing wrong with the concept. I'm just not sure that this is ever going to be made. And what has it done? It's caused more confusion about whether there's ever going to be a Model Q. And I think that's why Tesla's not quite staying up with the market this morning. It's not, it was very strong earlier, and then these articles started popping. And ever since the market's been open this morning, Tesla has not been doing as well as the rest of the Mag 7 or the NASDAQ. So this article comes out of the NASDAQ.com this morning. Adam Jonas at Morgan Stanley estimates Tesla will have 900,000 robotaxis on the road in 2035, and that each of those will contribute just under 20,000 to net income annually. That implies 17 billion in robotaxi profits in 2035. Subsequently, Jonas believes the number of robotaxis will grow more than sevenfold to 7.5 million in 2040, adding 120 billion to net income. Now, that would be approximately Apple's current net income. They think it'll happen in 2040. Of course, you and I think it'll happen in 2030. So there's a big difference, but either way, it comes up to the same dollar number, 120 billion in net income on robotaxi alone. Oh, then hedge fund billionaire Rod Barron is even more optimistic, the article goes on to say, about autonomous driving. He recently told CNBC that every robotaxi could contribute between 30 and 50,000 in profits annually. In that scenario, a fleet of 900,000 robotaxis could add 45 billion to net income, and a fleet of 7.5 million robotaxis could add 375 billion to net income. This would be, I think, closer to the Cathie Wood concept. Jonas and Barron arrived at these figures by making numerous assumptions about costs and consumer demand that may prove wildly inaccurate. As a result, investors should anchor to their estimates, shouldn't anchor to these estimates, but instead consider the big picture. It's encouraging that a professional analyst and a successful hedge fund manager have such conviction in Tesla. Beyond mobility and robotaxis, Tesla could disrupt the labor market with its autonomous humanoid robot Optimus. The company plans to build 10,000 Optimus models for internal use this year and may start selling them to other companies as early as the second half of 2026. Where did they get the second half of 2026? That has never been said. This is made up out of thin air. I believe they'll start selling them at the second half of 2025, but certainly early in 2026. Optimus has the potential to be north of 10 trillion in revenue, according to Elon Musk. Tesla stock appears expensive right now, but many look reasonably priced may look reasonably priced in hindsight. Wall Street experts, I'm not reading very well this morning. Wall Street expects Tesla's adjusted earnings to grow at 24% annually through 2026, which makes the current valuation of 99 times adjusted earnings look expensive. But the consensus estimate doesn't factor in the potential uplift from autonomous driving and robotics products. Alternatively, Adam Jonas at Morgan Stanley estimates Tesla's earnings will increase by 35% annually through 2030. That forecast makes the current valuation look more reasonable. Investors who are confident that Tesla can disrupt the mobility and labor markets with robotaxis and robots should consider taking a buying position today. Then Bloomberg has an article out this morning, which was provided by Gary Black. Thank you very much, Gary Black, on X. Bloomberg feels that Elon and they're wondering how long the Elon and POTUS bromance will last. They're worried that it might break up. The key points of this article were Elon Musk's proximity to President Donald Trump has boosted his fortune, but the relationship has also damaged Tesla's brand, leading to a slump in Musk's wealth. Well, yeah, except it went up and then came back down. So yeah, all based on the same theory that this is important, and it is. Musk's role in Trump's administration has sparked tensions within the White House, with some cabinet members pushing back on the sweeping job cuts and approach to government efficiency. And the recent plunge in Tesla's stock is partly due to a backlash against Musk's relationship with Trump, and the president's decision to publicly support Musk has only deepened that backlash. Well, okay, if you think so. I think you already know my position. I think that the Trump bump was partially deserved. I think the Trump unbump is also partially deserved. I think it went way too high, and I think it's come back way too low. So somewhere in the middle, I think Brian Wang said the other day, 350 might be about the right price right now. Probably the stock should be trading for 350 right now. Barron says this morning, the price cuts are piling up. On Friday, Wells Fargo analyst Colin Langan cut his Tesla price target to 130. Oh no, to 130. Oh, but his price target was 135. I'm sorry, that's so ridiculous. He kept his sell rating on shares. Well, yeah, if you got the price at 135. Langan cut his first quarter delivery estimate to 360,000 vehicles. I think that's reasonable. Price cuts are having diminishing benefits, he wrote, adding that Chinese EV competition is intense. Looks to me, from everything I'm seeing right now, Mr. Langan, that the Tesla is going to do fine in China. Langan also expects the U.S. to eliminate federal purchase tax credits worth up to $7,500. I do too, but I don't think it'll be till next year. He sees a rebound to 450,000 cars in the second quarter. That's reasonable, driven by the updated version of the Model Y and the affordable Model 2.5, referring to the planned launch of Tesla's lower-priced new model. Still, his full-year estimate fell to just under 1.7 million from over 1.8 million. Tesla delivered about 1.8 million cars in 24, flat compared to 23. If Elon Musk protests continue, downside could be worse, he added. Yeah, but he's not taking into consideration the upside from the conservatives, the Republicans, the independents, which has been now clearly pointed to by I don't know how many different people. The Model Y is going to sell like crazy. The new model is obviously going to be a plus. The Model 3 is doing well. I think everybody that's thinking that this is going to be a down year is crazy. I haven't looked at the second quarter yet to see what I think the numbers are going to be. I think this 450,000 is okay, but it might be higher than that. We might be seeing a record quarter in the second quarter. Post-Trump Elon duo highs. Investors are starting to agree that there's no fun in the fundamentals, wrote Langan. Tesla stock traded north of 488 in mid-December, below 488 and change. Partly fueled by the belief that Trump administration will be good for Tesla stock, and some of that razzle-dazzle momentum has spoiled, as I just mentioned a minute ago. Okay, now listen to this. This is the key. This is the key to my whole program today. Okay, it's long, but it's worth it. Listen to this. This is from Fortune magazine. You're going to be shocked by this article. Buying a car shouldn't be a purely political decision. Well, I'd start right away to say, well, it shouldn't be a political decision at all. But the controversy surrounding Tesla's CEO Elon Musk has tied his brand image heavily to the global political upheaval from the US presidency of Donald Trump. There have been many news reports predicting Tesla's imminent demise in Europe since Musk's infamous hand gesture at Trump's inauguration. But while the sales figure doesn't look good, it's too early to prophesy the collapse of Tesla. Here's why. Number one, if you just look at the European sales figures for Tesla's cars in isolation, the situation certainly appears dire. According to JATO, J-A-T-O, Tesla sold 18,121 cars in January 2024, but just 9,913 units in the same months in 2025, a collapse of 45%. Germany's drop was particularly telling, considering that is where Teslas are made in Europe, with 3,150 cars shipped in January 24 and only 1,277 in 25. A 59% decrease. France was even worse. In February, however, the UK bounced back considerably with 3,851 cars being sold, a 21 increase compared to the previous year. Then, according to local sales data reported by Electrek, the falls in other European, who reads Electrek anymore? Who pays any attention to that rag that is completely negative? The falls in other European markets have continued, with Germany down 71%, etc. However, there is some sense of deja vu in all of this. In August, Fortune, we reported on BMW going ahead of Tesla in electric sales in Europe, only for Tesla to return to form a month later. In the UK, Tesla went from 7th place with 5% of EV market in January 2025 back to the top again with 19% in February. If there's an Elon effect damaging the Tesla market, it doesn't appear to be hitting Britain that obviously, at least not yet. Oh yeah, there's also this kind of rolling problem, as we know, in terms of when things are shipped for export. The first thing to consider is the cyclical nature of Tesla sales. The company reports its figures quarterly and for years has followed a pattern where the last month of the quarter, March, June, September, December, is always a bumper one for deliveries. This is then followed by a drop in the next month because there have been a shift of numbers to the previous quarter and moving them up from what? It always has to do with how many cars are being shipped out of Shanghai to Europe. But now with Berlin making cars the last couple of years, that is smooth, and Elon has also attempted to smooth it out. But there is always a push in the third quarter. In the UK, for example, Tesla had a whopping 20% of EV sales in December 2024 before that dropped to just 5% in January rather. The bounce back in UK sales in February is a surprise. You'd expect this to happen in March for the end of the quarter. However, there's another factor to take into account. Tesla's best-selling car, the Model Y, has had a refresh. The initial launch edition versions are due for delivery in May. Really? I think they're happening now. But these are extremely expensive 60,000-pound cars, and most mainstream models will be arriving in June if ordered right now. I think it's going to happen a lot sooner. It's quite possible that European buyers have put off that Tesla Model Y purchase in favor of the new model. They're waiting. They're Osborne, which will significantly dampen current sales. After all, who wants to have the old model when the new one is just a few months away? The Model Y has been on sale mostly unchanged since it was launched at the end of 2021. It's also unlikely that the surge of UK numbers comprises old stock of Model Y cars being snapped up at favorable prices. This is further accentuated by the fact that new EVs costing more than 40,000 pounds in the UK incur higher annual tax rates from April of 2025, and almost all Teslas fall into this price category. So buyers may want to get their purchases in before the tax rise. So all these different things are impacting. It's clear that investors have been reading the negative European sales reports with concern. From a high of 484 in December, how come they changed it to 484 from 488? It was 480 was the closing price. Anyway, in December, at the time of this writing, Tesla shares have dropped to 246. The rapid descent appears to have begun around January 20th when Elon Musk made his much maligned hand gesture at Trump's inauguration, which you'd have to be an absolute moron. I'm going to use the word. You have to be a moron. You have to be a retard. You have to be an idiot to think that that was a German salute. There was nothing about it that was German. And he was saying the words, I love you at the same time. It's just nuts. And yeah, you're going to do this. You're going to do this. You would know the impact. Why in the world would the smartest man on the planet do that knowing that there will be this negative impact? No, he's an odd man. The rapid descent appears to have begun. Oh, I'm sorry. However, the share price drop also needs to be put in context. 6 months ago, Tesla shares were at 216, and now they're at 240. And a year ago, they were at 179, and now they're at 240. So long-term investors might not be panicking. Shares always go up and down with Tesla, as CERN Basher pointed out in detail last night. Hope you saw the show. If you didn't, I'll put the card up later. The true test will be when we see how many refreshed Model Y cars ship by the end of June in Europe. This information should be available in early July. He could also pull a rabbit out of his hat by launching the long-anticipated $25,000 Model Q, Model 2, whatever model you want to call it. This was expected in 2023 at the latest 2024, having been teased on Investor Day in 2020. But in a typical Elon Musk alternative time, however, expectations have been dashed. No clear indication that the new cheap model, except for multiple times that people have said it's coming first half. Okay, so now Musk's interests have shifted to the robotaxi, SpaceX, and Doge activities for the U.S. government. Nevertheless, many things Elon Musk promises don't come to pass or take longer than implied. Some of them do happen. In fact, most of Musk's pledges have happened for Tesla to have had the enormous disruptive effect we've seen on the auto industry, shifting it towards battery electric vehicles in a matter of years. Oh, let me read that again. In fact, enough of Musk's pledges have happened for Tesla to have had the enormous disruptive effect we've seen on the auto industry, shifting it towards battery electric vehicles in a matter of years. According to EV volumes, 19.7% of car sales in 2024 were EVs, and around 62.5% of those were BEVs. The shift has been a dramatic. Then there's the final question about whether people really buy a car, even electric one, based on their view of politics in the company's CEO. In an early adopter market like that for BEVs, which is intertwined with concerns about sustainability and climate change, this will be more the case. As we've argued before in Fortune, there's a potential mismatch between Elon Musk's current political stance and the typical BEV buyer. But EVs are going mainstream, and average car buyers don't care so much about making political statements with their automotive choices. They just want the best car they can get for their budget. Oh, another repeat. They just want the best car they can get for their budget. The Tesla Model Y and 3 are still very good vehicles with leading-edge features and technology. Will that be enough to persuade purchasers that the online and political behavior of Tesla CEO aren't that important? Well, perhaps not. But even though there are some very negative sales figures so far this year, it's not yet the moment to call time on Tesla in Europe. Give it at least until July. And I think we'll know way before that. I think we'll know by the end of April. But July, okay, we'll take that number. I already did. This is Randy Kirk, by the way. Like, subscribe, notify, and you definitely want to hit notify. If you've never subscribed and hit notify before today, today is the day to do it with the shows that are coming up. Believe me, you're not going to want to miss either of the shows coming up later today. Consumer sentiment slid another 11% this month, with declines seen consistently across all groups by age, education, income, wealth, political affiliation, and geographic regions. Sentiment has now fallen for 3 consecutive months and is currently down 22% from the exuberance, it doesn't say that, in December of 2024. While current economic conditions were little changed, expectations, you hear that now? Optimism for the future is down, but current economic conditions were little changed. Expectations for the future deterioration across multiple facets of the economy, including personal finances, labor markets, inflation, business conditions, and the stock markets. Many consumers cited the high level of uncertainty around policy and other economic factors. Frequent gyrations in economic policies make it very difficult for consumers to plan for the future, regardless of one's policy preferences. So let me tell you what this means. What this means is that when the tariff gyrations stop, when we know what it's going to be. I think April 2nd. When we know we've got the CR is going to be passed today, that's going to be out of the way now. Doge is gonna still be in the headlines, but it's gonna be, I think, less intense. Now, does that mean there's not gonna be any chaos coming out of the Trump White House? No, there will be continued chaos coming out of the the Trump administration. Every single time he turns around, he's making some new recommendation. There's headlines this morning about the Gaza situation. They've found 3 countries apparently that would take the Palestinians on a temporary basis while they rebuild Gaza. I mean, there's going to be constant stuff, but I think consumers are going to be more relaxed a month from now than they are right now. Consumers from all 3 political affiliations are in agreement that the outlook has weakened since February. Despite their greater confidence following the elections, Republicans posted a sizable 10% decline in their expectation index for March. For independents and Democrats, the expectations index declined even steeper, 12 and 24. The Democrats think 24% less optimistic than they were. Year ahead, inflation expectations jumped up from 4.3% last month to 4.9% this month, the highest reading since November 22, and marking 3 consecutive months of unusually large increases. Now, next month or next time that these consumer confidence, this one. Anyway, the next time they report, with the egg prices dropping like crazy and with gas prices dropping like crazy, I think you're going to see completely different attitude. So marking 3 consecutive months of unusually large increases. This month's rise was seen across all 3 political affiliations. Long-run inflation expectations surged from 3.5 in February to 3.9 in March, the largest month-over-month increase since 1993, stemming from sizable rise among independents and following an already large increase in February. Again, I think also the tariff nonsense. And when I say nonsense, I think the tariff thing is great. I think it's fantastic. I'm all for it. I think the tariff, the jitters around tariffs will be gone by this time next month. We're on what? Today's the 14th? Yeah, by this time next month, I think a lot of that will be behind us. All right, so consumer, I always forget this word, consumer sentiment was impacting the market when I looked just before we went on air. Let's see what the market is looking like now. Well, you know what? They've decided not so much. So Tesla is up 0.72% right now, and it's like this. It was up way more than that earlier. It is down, but now flat. The Dow Jones, which was going up this morning, but it's still up 0.77%. NASDAQ up 1.35%. Very strong number, even though it was up more than that earlier. S&P up 1.1%. Good number for the S&P. All good numbers. Magnificent Seven all up. The big one this morning is NVIDIA up 3.88%. Go NVIDIA. Okay, the Cathie Woods all up this morning, 100% across the board, although not as much as they were earlier, kind of like everything else we just talked about. Okay, let's go ahead to the bonds. Very sadly this morning, the bonds are up almost 2 basis points. I just hit the wrong thing. We have got the, so sorry. The bonds, see if I can get it right the third time. There we go. Okay. The 10-year is up 2 basis points to 4.297. We've got, and AJ and I are going to talk about that a lot tonight. When you watch, you definitely want to see this. Obviously, you want to see Larry too. We've got the 2-year up 4.3 basis points at almost 4%. And you've got the 2-month up 0.3 of a basis point. So not very much on that one. Oil prices this morning up a little bit, 13 cents at 66.67. Natural gas down again, 1.46% this morning, but still slightly above 4 at $4.06. Gold surging, but back below 3,000. So even though it's up for the morning at up $2.50, it's sitting at 2,993, and it was well over 3,000 overnight. Silver also was well over 34 at like 34.50. It's backed off of that a little bit, down 0.47% at $34.15, but that's still breaking into new territory. Copper down 0.79%, hanging in there, not quite over $5, sitting at 4.89. You've got the euro rallying. But overall, not much movement in the dollar. You got Bitcoin up 3,000 this morning at still, but 83,405. So way down at the bottom end of its big range, its major range. That's it. That's all there is. There ain't no more. The markets this morning looking good actually after those consumer sentiment numbers, which were not that great. The truth is, what it doesn't say in that description is the consumer sentiment is still positive. It's just not as positive as it was. So, and I think this will change dramatically again when things relax, and they will, as they did in the first Trump administration. Things are going to start. We're going to be figuring all these things out. The Ukraine war looks like it's coming to an end. I would say 80% chance the Ukraine war is coming to an end. I've been talking about the bonds, about the Fed cutting next week. I would say sentiment suggests that this is not going to happen. It should. Pretty much everybody agrees they should cut, but pretty much everybody's saying that this Fed is always going to be late, always going to be behind the curve. But with the cuts in federal spending, they should cut. With the cuts in labor in the federal government, they should cut. Whether they will or not, I think my expectations are lower now than they were. I think that there's still a chance that they will, and they should. Okay, what else have I got to tell you this morning? I think that's all. Just make sure you watch these other two shows today. Oh yeah, I'm going to put up the CERN Basher from last night. Outstanding. You definitely want to go take it. CERN, you know CERN. You always want to watch CERN. So there's the card right there for that one. That's it. It's been great talking to you.